if you could put yourself on mute, that would be great. If not, we'll do it for you. If you've got a question during the middle, if somebody's speaking, if you have a question, you can certainly type it in on your Zoom chat, or at the end, we'll have questions and answers after everybody presents their project. And if you have a question, you can certainly unmute yourself and ask the question. At the same time, I might ask questions as well that during the interview, just so people will understand exactly what the product is that your haves and your wants. So this is our fourth. I think it's our fourth time. Jennifer,
they can't hear me, son. They can't hear me on the Zoom, honey. This has to do with investments and commercial real estate.
Hello.
So
I can hear you on the Zoom.
You need to talk to me. You go ahead.
Oh, you can hear
It's
them.
coming through my hearing aid.
Oh, okay. Thank you.
So it's good.
Okay. Well, now that's better. Okay, so I think Jennifer's is the third or fourth time?
I think it's our fourth.
This is our fourth one, and basically the format is haves and wants. If you've got, most people have already presented their packages and it will be in front of your Zoom picture. If you do have something that you did not submit and you want to add it to the end, feel free to talk about it. We're happy to add you on. I think we have about 7 or 8 presenters today. The goal here is to try to open up conversations with everybody. Perhaps there's an investment that you have that might have a product that we are listing, or you have a product that you've listed that somebody else has a buyer for. This is a strictly investment sales. It's not really meant for owner users. It's really more investment sales. That's kind of our goal here. And it can be any across all retail, office, industrial, whatever. And land, if it's an investment land, that's fine. So I think that is the protocol. I believe everybody we muted everybody. Okay. And again, welcome to our fourth investment sales call. My name is Alan Joel. I'm your current president. President in, I guess, lame president, if you will, since we're not meeting again. But I do primarily investment sales here in Atlanta. And we are a full service real estate firm and we do a lot of things, but I'm involved in investment sales. So welcome. Our first, Dan is our new member from St. Louis. Angelica, thank you for submitting your properties, and I will give you the floor.
Thank you all. We are in a market looking for single tenant industrial buildings throughout the U.S. It can either be a long-term lease, or we can accommodate for a sale lease back. Really, we can look at something as low as $1 million, $2 million, all the way to 20, 30 million. The cap rates would depend obviously on a terms of the leases and on the credit of the tenant. But again, we can take credit tenants or local credit type of tenants as well.
So Dan, is this
pretty simple requirement?
Dan, is this a client you've done a lot of
Your
business
phone's
with?
ringing on.
Oh, thank you.
Jennifer, or whoever it is.
So this is actually our sister company. There we go.
Yeah.
This is actually our sister company, Bamboo Equity Partners. It's a full service private equity investment company, and invest in office and industrial real estate. So, but this is a mandate that Bamboo has through one of its fund of funds.
Just out of curiosity, you may not even know this is available, but have you gone through the website and sent this out through the extranet? through
I
CORFAC?
have not. I have not done that yet. I was planning on doing it, and then this popped up, and I thought this might be a good way to start us off. So
Cool. We are very strong in industrial, so this requirement that you have is certainly something that you should be getting a lot of people sending you information on. I'm going to open it up to the floor. Is there anybody that has something they want to talk to Dan about on this specific requirement?
Dan, this is Scott in Piedmont Properties in Charlotte. We could talk offline, but do you think we got an off-market deal that may work? It's like but it'd probably be a 6.5 cap, but you got 14 years brand new construction. Is that something you think y'all could get to, something that low on a cap rate going in?
we would look at across the spectrum. Yep. So we can look at lower cap rates, but again, it would have to be new construction. It would have to be a good tenant type of a deal. So
I'll reach out to you. Thanks, Dan.
that'd be great. Thank you.
Anybody else have a question for Dan on that specific requirement?
Hey, this is Joe out at TRI in California. I just have a basic question. What is industrial going for per square foot out there in St. Louis, Dan?
You can go anywhere from 35 to 70 a square foot.
Okay.
So
Location?
Yeah, location and quality, and the newer buildings are, call it, close to 65, 70, and then some of the older product you can probably find it for 25 to 35 a foot.
And does it pencil out to do new construction there, or this is all about existing inventory in your market?
So the new construction is penciling out only when there's certain incentives, local incentives. So there's a couple of municipalities that are giving tax abatement. Okay. So what that does in terms is, reduces your triple nets and makes you competitive with actually even more competitive sometimes than the older product. So
interesting. Okay, thanks.
Yeah. No problem.
Okay. And Dan, if you have any problem with that, sending out that email, let us know. I'm sure Christy or Jennifer can help you with it. It's pretty simple, and it's very effective.
Perfect. I appreciate it.
Thank you. And I guess the next up in your firm is Gary. Gary, are you on? I think you are.
Yes, I'm here. Hello. Can you hear me? Oh, I'm good. Thank you very much. Yeah, a little overview to Dan Dockovic. He's actually on vacation down in Florida, so he didn't tell much about Bamboo, but we currently own and manage about 3 million square feet of both office and industrial properties. Just acquired another industrial building last Friday and a new corporate office for us in Clayton, Missouri. So, we like to buy properties similar to ones you're going to be looking at from me. And I'll just kind of go right into what I have on the market right now. I have an industrial package, and these are absolute triple net leases. 2 of the buildings are in Ohio, and 2 of the buildings are in St. Louis, Missouri. There's 4 properties. Of the 4 properties, the 2 in St. Louis, we understand very, very well, and the ones in Ohio, we've interviewed enough people there. We have a pretty strong feeling for those also. It will be an absolute 15-year absolute triple net lease on 3 of the properties, and 1 is a 6-year triple net lease in O'Fallon, Missouri. We just put it out on Real Capital Markets and Crexy Friday, and so we've been pretty well overwhelmed with the amount of interest. So if anybody's interested in this, they could either call me directly or go right into Real Capital Markets and sign the confidentiality agreement and pull it out.
That's a great listing.
Yeah, I've been, kind of give you a little history. I started doing machine tool work, about 20 years ago, and I really grasped on the machine tool industry and have done like you guys. All you guys are all smart ladies, and the biggest thing that we've done is we've showed how much money they can make in production and staying out of the real estate business. And this particular gentleman I've done a lot of deals with, and he's actually using this capital to go out and buy another company, and then he'll put that on the market as well. So thank you.
What, just out of curiosity, what kind of credit are you looking at on these? Are they multi-tenant or single-tenant buildings?
These are single tenant buildings. Metal Seal is the parent company of the Ohio properties and the property on Schutz Road. And it's about a $40 million company, and they are profitable. And then Drug Packaging Lane it's a company, it's called Drug Packaging. It's not part of, it's just an investment that my buddy happens to own also. And Drug Packaging is an even larger company, closer to, I got to get confidentiality agreements signed to kind of disclose their financials, but they're strong.
And what kind of cap rate you think this will probably trade at, just in general?
I think we're probably looking in a neighborhood of 7.5 to probably 8 3/4. And the reason for it is because you're looking at, St. Louis and Massillon and just a little bit different markets. And that's kind of where we're probably it's going to trade. The interest we're getting right now is really strong, and who knows, it may even trade for a lower cap, but the expectations are set for what we just discussed.
Get some of those California guys out there, they'll look at that cap rate and love it.
Yeah, it's funny. We get a lot of interest more from New York than California. New Jersey, New York. I guess people want to get out of there for some reason.
Hey, Gary, it's Jonathan in Chicago. Good to see you.
Hey, Jonathan. Good morning.
Have you reached out to our folks in Cleveland and Cincinnati, our CORFAC?
I did, and I did talk to them. They weren't selected, and the reason for it is the owner has a relationship with a firm in Ohio, and he wanted to continue with that relationship.
They know about it, so if they have a buyer, then certainly they can make a commission that way.
Yeah, absolutely.
That's great, Gary. Any questions for Gary other than what we've talked about for anybody? All right. I guess, Gary, you want to go to the next one. It's still you. This is more your office deal, it looks like.
Yes. Yeah, this is a property. It's owned by Bamboo Equities. We just put this on the market as well. Unfortunately, this is also on Real Capital Markets. I'd like to put a photo up there because this kind of tells the story of what we do as Bamboo Equities. This is a Class B office building in a really highly desirable area. It was 50% occupied. We bought the building, and we've got it up to 96% occupancy currently. And so what we do is to give the money back to our investors, we try to turn our product once we hit a certain threshold. And so we put this on the market. I compare this to an apartment complex. There's really low risk because there's so many tenants in the building. And I could flip off the screen and tell you exactly how many, but I guess you guys can just go on the Real Capital Markets and pull it down. But if you look at this project, it was just a deplorable building. And then we put the capital into it to bring it back to life, and it's just been a very, very successful project. And this will be our third building that we're turning in our office portfolio.
So Bamboo is more of a value add type of owner.
Correct.
Cool.
Yeah, we also do stabilized income, by the way, too. So yes. It depends on who we're working with.
So the office building, how old is the office building and how old was it?
It was built in 1973. And I wish I could share my screen, but I'm afraid if I do that, I'll lose everybody. and it was rehabbed just a couple years ago.
Okay. Interesting.
It's okay, you know, and for anyone that's interested, just send me, you know, you can send me your email address, and you know, I'll send out the package to everybody so they can see kind of the before and the after, and kind of get an idea of what Bamboo does, and how we can help you guys grow and right now we are anything we put under contract, unless it's some unusual set of circumstances, we close. So, and people in St. Louis know that Bamboo does what they say they're going to do, and we perform.
Now, do you guys manage and lease as well? So if you had an out-of-town investor, is that something that you guys would continue to do?
Yes, we do. And the majority of things that we sold, all but one office building, we've maintained the leasing assignment.
Okay, cool. Any questions for Gary? These are good. These are really good, Gary. Thank you, both you and Dan.
Hey, this is Scott again. Not so much about the property, but Gary, just 30, 45 seconds, your experience with Real Capital. Is this your first time putting properties out there? Any good, bad, and different?
It's not my first time. And actually, Real Capital Markets, on the first office building I put in the market, was about 2 years ago, and Real Capital Markets really didn't get any traction. We had a lot of people that were interested, but the amount of hits and the OMs that were signed were pretty insignificant. This time around, they put it out to 1,500 office people and 1,500 industrial people. It was coincidence, the numbers were the same, so let's just go out to 1,500 investors. We've had a tremendous amount, and that's a kind of a bad word to use, but we've had so much interest. I will tell you in the next 45 days how successful Capital Markets happens to be. Another platform that we use and have a lot of success with, Scott, is Crexy. And I think we get as much success from Crexy as we do from, and I don't know if that's in all the markets or not, that's probably one of the best platforms for selling investment real estate that I found.
So it's about $3,000 to $4,000 per listing, isn't it, to do it at Real Capital?
Correct.
Yeah, we've used both as well. And Crexy is much cheaper, but you're right. It's but the one thing that's nice about Real Capital is you can put all your information in one spot, and they can track who's seen it, and how long, and things like that.
Yeah, so and I agree, Alan. And you know, for that kind of money, when you're selling something that's valuable like these listings, you know, the commission more makes up for the investment in the platform.
So are you getting your seller to pay for this, or is actually Intellica paying for that as part of their assignment?
One of them we're paying for, and the other one the client's paying for.
This is Ed Delbacar of Walnut Creek. We use Real Capital Linux all the time and have good results. I have a $54 million building in escrow closing in 3 weeks that we found the buyer for a government leased investment, county leased, out of Chicago, who responded.
Has anybody else used Real Capital Markets? We have, and we were successful, and it's expensive, but it was worth it. It was a $20 million transaction, but I don't think it's worth it for anything under $5-6 million. It gets to be pretty expensive. Okay. All right. Our next presenter is actually not here, and that's Century Realty out of Pittsburgh. They wanted that. This has been on the market before, so some of you may recognize this. It's a 27,000 square foot building. If you have any questions about it, please give John or Adam or Jessica a call. It is in Richmond, Virginia. I believe they have talked to the Porter boys. Is there anybody from Porter on today? from Virginia. Okay, I'm not sure, but if you have any questions about that, please reach out to them. They couldn't make the meeting, unfortunately. But that is number 4. All right, our 5th one, Phil, you're up.
Good morning. So if you guys know anything about the Phoenix Metro Valley, it's quite large. If you're looking at central Phoenix, you start going up northwest. We had, over the last 10 years, a lot of build out on the outskirts of town. This is a fairly new 4-story office condo building in Surprise, Arizona. So this is in the newer part of town. We have a medical group. He's a custom pharmacist, which he creates, I guess, specialty medicines for people throughout the state. And we landed him as an investment about 4 years ago. The investor I have, he wants to expand, and so we are going to be putting this on the market next week. So at this point, we don't have any marketing. So I just gave you guys a couple of pictures of what the building looks like. And on this one, we're going to be coming at a 6 cap. It's roughly 1,800 square feet. And the tenant is going to be in the building until 2028. If you guys have anybody who's looking for a solid investment with a lot of term, we would love to have any offers come in. And if you have any other questions, we should have our marketing up and running by the middle of next week.
So it looks like a good 1031 exchange kind of deal.
It is, yeah. And this tenant actually, when this building was being built, the owners created the floor plan specifically for this tenant. So he has a clean space room, and they put quite a bit into the space. So it's very impressive when you walk into it. So on this building, it's got a beautiful courtyard on the interior, but the way that he designed his space is he has access from the interior, but they also put in an entry on the outside of the building in the corner. So an easy investment, good financials, and if you have any questions on it, let me know.
Good list, a good, kind of a 1031 listing. I have a question for everybody listening. Now there's, I know everybody's been reading about the 1031 exchange on the chopping block. I'd like to get somebody's opinion on whether that is they think that's gonna happen or not. Obviously, if they do take away the 1031 exchanges, that could impact a lot of our business immediately and in the long term. But I would be interested to hear people's opinion on that if you have one. All right, our next presenter is John at TRI. John, are you on? I can see you, John, but I can't hear you. Well, now I can't see you.
Okay, just a second. Yes, I am.
I can hear you now. That's good. There you go. We
Thanks
see
very
and
much.
hear you.
Look at that technology, beautiful. Good morning, everyone. I have a couple of properties. This is an opportunity for a prominent regional mall out parcel location. It's in Fairfield, California. Fairfield is approximately, call it about 50 miles east of San Francisco. And it's a Chick-fil-A anchored co-tenant. It's essentially going to be a 3-tenant investment. Currently, it's a 2-tenant investment. And we had some issues during the COVID relative to the Fuddruckers. So Fuddruckers has half of the building, and they are in 9,837 square feet. The issues was it fell out of escrow due to the fact that people were not comfortable with the Fuddruckers concept, that it was too large.
John, you faded out on me. I don't know if you can hear me.
And so
Try
what we're
again.
doing today, oh, am I phasing out?
Now you're up, back on.
Interesting. Okay. So the Fuddruckers is being downsized to about 3,500 square feet. That will allow us about 6,200 square feet. And of that, half of that will be absorbed by the brewery that's also in the Fuddruckers space. So the brewery will actually expand into about 3,200 square feet. Fuddruckers will downsize from 98 to 35, about 3,500. And then we're looking at potentially a pizza operation absorbing the other 3,000 feet. So this investment today with the Chick-fil-A, most Chick-fil-A's across the country are selling for about 4.4 cap. We've got this priced at a 5 cap with the Fuddruckers. So we took the Fuds at a 6.2 and the Chick-fil-A at about 4.2 and blended it. And so we've come up with that 5.5 cap, but I think there's some flexibility there now due to the it falling out of escrow. However, so the price is approximately, $6.5 million. There will be a 10% increase in this Chick-fil-A in about 6 months, and that'll be a 10% increase in the Chick-fil-A. We believe that we can increase the income stream here by almost $200,000 by taking the absorption of the brew pub and the potential pizza operator. So this deal could go from a 5.5 cap to about an 8 cap pretty quick. Anyway, it's a good investment. It's a prominent location at a regional mall location. And the other site I have will be an owner user deal in Dublin that I'll actually bring up later on here next time we have this meeting.
So John, real quick, what's the actual size of the whole project, and how long of a lease does Chick-fil-A have?
So Chick-fil-A, there's only 6 years left on the primary term with Chick-fil-A. They have 3 5-year options and another 4-year and 11-month option after that. So essentially almost 4 or 5-year options. It's a double drive-through. It's a rare opportunity, first of all, to get a drive-through at all in Northern California. You have a double drive-through at a regional mall is almost unheard of, and they're knocking it out of the park. So there's a very good chance we could walk in and have a blend and extend. So if it was a requirement that you will needed a 10 or a 15-year primary term with Chick-fil-A, that's something we could broach them with. But there is about 6 years left on that primary term with the 4 or 5-year options. The total project is 9837, and then the Chick-fil-A is 4530. So that's a total project of 14,367 square feet.
Okay, so we got that square footage wrong, because I was looking at the numbers going 7,000 feet at 6 million is a lot of money, but that makes more sense.
No, it's 14. Yeah, exactly.
Yeah, 14,000. Mm-hmm. That's a very interesting, that's a good listing. Does Chick-fil-A report their sales?
They do not. They don't pay percentage rent. They don't report. The rumor has it, though, they're doing over $4.5–5 million.
It's about right. If they're Chick-fil-A is based in Atlanta, and the double drive-throughs are, they're killing it. They're killing it. They went the opposite direction of everybody else. Chick-fil-A did. So, any other questions for John on this? I'll leave it open for anybody on. Okay, we'll go to First Capital. Austin, you got something in Orlando you want to talk about with your express car wash?
Yeah, hey all. So my name's Austin McWilliams, First Capital Property Group in Orlando. New to the team, love that we're part of CORFAC. If you're see back here, I got a Peloton here. If you're a Pelotoner, let's connect. Looking forward to getting to know some of you in the days ahead. My investment opportunity, as he mentioned, is a little different than what we've been discussing. So I'm going to break it down but it's pretty simple. Many of you no doubt have seen express car washes pop up in your area over the last 5 years or so. The fact is that express car wash as an industry is in the midst of a disruption due to technological advancements and consumer trends. And many people are in full-on buy mode of these types of assets. So similar to self-storage in previous years, the express car wash industry is characterized by an upfront acquisition cost, a need to stake your claim for a territory before anyone else does, and then low overhead costs with high profit margins. The automated subscription service, characterized by many industries, also ensures revenues are sustained, which wasn't something that was previously had in previous, detail car washes. So many of you can probably do the math that if you live in an area with 70,000 people in a 3-mile ring on a road that has 40,000 trips, just capturing a fraction of the market in monthly subscribers, you bring in anywhere from $500,000 to $1 million in revenue, and sometimes even more on a $3 million investment, and the costs are 2 to 3 on-site employees, water, and chemicals. I said $500,000 to $5 million, the price range that I listed here, but really the cheapest cost of land is somewhere around $500,000 minimum for a worthwhile region, and then putting anywhere from $2 to $4 million into building one, depending on what you want to kind of how nice you want to make it. You can also acquire an old car wash with a tunnel and retrofit it, but you're looking at probably about $2 to $2.5 million purchase price, at least here in the Central Florida and surrounding region, plus another maybe $500,000 to $1 million in upgrading it. But the reason why private equity groups are beginning to buy up so many of these large portfolio name brands is because it's an arms race where you're essentially staking claim to your area. So that's where I come in. I've helped put nearly a dozen properties under contract over the last year, and I've mapped out the entire landscape of express car washes in the state of Florida, and have identified what I call pockets of opportunity based on traffic counts, population density, surrounding retail centers, etc. So I guess my end message would be, if you have a car wash investor in your region, or if you just have an investor that's intrigued by the potential returns of a car wash that wants to get into Florida, which is one of the fastest growing markets in the country, I'd be happy to talk to you more about what a brokerage partnership could look like. So
Austin, is this just Florida? What happens if you had something in Atlanta? Was express car wash go in different markets, and is that something you can help us with?
Yeah, I can. Obviously, there's a little bit of legwork that has to be done from a research standpoint, but from a, if you say just the general Atlanta area, I could probably go and, give me a few days, and I can do an analysis for you, and we can figure out where would be the best place to invest. But right now I have, all the information for Florida. I just, am looking for another buyer or two, because all of my buyers right now are under contract with their various different properties. And, these opportunities are not going to sit there. Someone's going to go and is going to, scoop them up. So just trying to get to the market before others do.
How much land do you typically need? And is this a good stopgap measure for somebody to hold land for 10, 15 years until it gets to be a higher, better use kind of scenario?
So, I would say that, unless, you look at, people not needing cars, which might be the case in, 15 years, maybe we're just driving around automated cars. I think that you're going to need car washes, and people, it's nice because you just pop in and out. You're going home, from work. So you go on the going home side of the road, and you will pop in for 5 minutes rather than having to wait, 20 to 30 minutes for a detail center. But your question was, your question was, is this an opportunity for, rephrase that one more time.
Really two questions. How much land do they need? And is this an opportunity for somebody that has some land that may want to, long-term, it's more valuable for maybe something different? Is this something you could do as a 10 to 15 year investment and then sell it and redevelop it?
Oh yeah, definitely. So You'll need at least, the smallest that I have seen is 0.65 acres. I normally want to make it more rectangular because that tunnel has to fit. The really good ones, the ones that have a number of the self-use vacuums, are somewhere in the realm of between 0.8 acres to 1.5 acres for some of the really big ones. And then, yeah, utilizing it, if you have land that is within a region where there is a good population, or even if there's not much of a population, but it's close to, let's say, a Walmart or I would say Publix here in Florida, but wherever, whoever is your big grocery chains, if you're somewhere near a center where a lot of people are driving consistently on a weekly basis, that's where these things really make sense for development. And then a lot of these are going, people are building them and then selling them for cap rates as well. Even if you don't have a lot of, even if you don't have a number of them, I've seen, one of them I saw, was sold at a 6.5 cap rate. And there was like 3 of them corporately. So, people are buying them up and think that they're pretty good investments from a long-term standpoint.
Now, is the Express Car Wash, is that actually a franchise setup, or is it the actual company itself?
So there's a bunch of different types of express car washes. So there's manufacturers that you would partner with to be able to build it. But one of the nice things is that because there is not a, people don't say, okay, well, I really want to go out to eat. Where do I go? Well, I go to Chick-fil-A. You don't have that with car washes. It's literally, does this car wash look trustworthy? Is it on my way home or convenient for me? I've never heard of any other car wash like that, but I'm going to use that one. So it's very decentralized, which means that it's very easy to get into the market for express car washes. But yeah, no, there's a number of different suppliers. There's Sonny's, there's Tommy's, there's a lot of different people who build them, and then you get to brand it as your own. So I know, there's one guy here in Central Florida who has 8 under contract in Central and West Florida that he's building up, and he already has 3 that are open. And his goal is just to kind of flood the market. So you can be regional, you can just do one-offs. There's a lot that you can do for an investment and return purpose.
So the last question I have is, if we have an owner of a piece of property that says, yeah, I'll do an express car wash, but I don't want to have to deal with it. Would you have an operator that could come in and be a partner with them, or that could kind of make this thing happen?
Sure. Yeah. There's again, lots of car wash operators out there that would be more than happy to partner with you. So I haven't done any of those deals personally, but I know that they're out there. The thing about it again is that it is very low. It does not take a whole lot to run an express car wash because everything is automated. People will clean their own vacuums. You have 2 to 3 people on site just to make sure that, if something breaks, there's availability, or if people drive up to the automated window that they say, hey, welcome to Mr. Car Wash, or whatever the name is. Here's the information, do you want to sign up for a monthly subscription? And then they're on their way. But there's only, 1 or 2 people, and then everything else, especially if it's newer, doesn't need a whole lot of maintenance in those first couple of years.
Mm-hmm. Good. Okay. Well, any other questions for Austin? That's interesting. Okay. Ed, you got the next couple of presentations. I'll let you start with Walnut Creek.
Okay, thank you, everybody. So this first one is a historical church in downtown Oakland. As a church, it's only worth so much. It's, downtown churches in Oakland and San Francisco are going by the wayside. So as a church, it's only worth so much money. What it's really worth, it's 3 blocks from 3 different hospitals, from Sutter, Kaiser Permanente, and also a nursing school. So it's actually zoned for a 10-story medical building. So it's really a development opportunity. There's air rights. You have to preserve the front facade. But there's land in back. You can build above it. We're actually trying to assemble 2 parcels next door to it. There's a Walgreens to the left of it. We're approaching them, and they might want to sell or not. So it's really a development opportunity. If you do acquire, if we do successfully acquire the adjoining property, there's also air rights that could be transferred. So this could be 100 to 200,000 foot mixed use or medical building next in the medical district of uptown New York by a BART station.
Okay. Any questions on that one? We can keep going, Ed. Why don't you go to the second one?
Okay, second one. This also is another development opportunity. So this is in the uptown area of Oakland. There's probably about 4 cranes in a 2-block radius. So across the street is a new hotel being developed, finished in about 3 months. Behind this building to the north is going to be the same developer building the hotel is aggregated that block, and that's going to be a large 20-story building. So this is in the middle of a office, hotel, mixed-use residential district. So somebody could buy it and occupy it, could be an owner user, or it could be developed on its own as a 22-unit building, or the adjoining, the rest of the block is owned by one owner who we're seeing if he wants to sell, but this is again a redevelopment opportunity in downtown Oakland for 2.75.
Okay.
Next
and
one.
you got, yeah. Then the next one's a marina. Wow, that's interesting.
So the reason why we took on the marina is not because it's an active marina, and it's actually 100% leased, under rented, but its value, if you look on the picture, you see the vacant land, that's part of the marina. So there's almost 6 acres that could be redeveloped into a motel, restaurant, or incubator warehouse. Then if you look at the hedge on the top of the picture, out of St. Louis, North Point is building 2.1 million feet of just-in-time warehousing. And right there at the top of that marina is a new Amazon logistics center for 160,000 feet that will be finished in November. October, actually. The walls are tilted up. So we have this marina next to the bridge, this Highway 4 that connects eventually to 680, and then the Concord Walnut Creek area. The city of Oakley would allow the left part of the marina to be redeveloped as housing, water housing, where you have, you put the front part of the house in stilts on the water. And then the house then goes on that land where you see on the left of the site. So this is a residential redevelopment, quasi-marina. Then the marina to the right of it is also for sale. And then it's just in the path of growth. We are actually also approached by a ferry operator. The Bay Area is going to be investing in ferries over the next 5 years from bridge toll money. So this is by ferry, this is about 45 minutes to an hour to downtown San Francisco and Oakland. So again, a redevelopment site.
Is the marina making any money at all as far as?
Yeah, no, the marina on 2 levels. There's very low debt, so it cash flows. It's, and if you had to borrow 80%, I'm not sure it would cash flow, but it's under rented. He hasn't raised his rents in about 5 years. He's retiring. It's a 3rd generation family that owns this. We do have the rent rolls and all the operating costs for the marinas. An interesting phenomena, there's about maybe 15 marinas in the greater Bay Area around San Francisco Bay. Marinas, like golf courses, are not a millennial thing anymore. So I guess if you're under 40, you can't afford or you don't enjoy powerboats as much. So marinas are we'll probably see a contraction in the number of marinas in the Bay Area, and I think also in the LA area.
Okay. Any questions for Ed on these?
Again, these are all development sites. That's why I specialize in redevelopment sites.
Okay, I'm going to open it up for general questions, and or if you have or a want that you want to bring out, tell everybody. Please unmute yourself, and we will wait to hear from you. So, or wave your hand would be fine.
So Joel, a process question. Alan, sorry, is can we create a spreadsheet of all the listed projects presented today and almost create like a national exchange so that people get once a month, per your call, the properties listed. And
So there's an Excel spreadsheet. This is probably on that Excel spreadsheet that Jennifer, don't you do that? Or is it Christy? I don't know who writes it up, but puts it on the Excel spreadsheet.
Do that.
yeah, because then if we circulate that once a month, and then we create a national exchange, investment exchange, so to speak. So that just for our marketing purposes, we can tell our owners we're doing this, our sellers, and then it will generate hopefully some sales and referrals across the country.
Why don't you, maybe we get, Jennifer, maybe you can send everybody the Excel spreadsheet of what we've done. Have we combined them all? We can certainly combine them all.
Combine all of, yes, we can do that.
Okay, so we'll all 4 of these sessions we can put together and put it on a list. And we can start, we'll maybe date when we talked about it. But that's a good idea, Ed.
Thank you. Thank you for all your work on this.
Yeah, well, hopefully we'll get some business out of it. Anything else they want to talk about?
I have a need that I would like to fulfill. Alan Cheek with Duncan Commercial in Louisville, Kentucky. We have a client that is closing on a major asset, and we're going to have about $17 million in cash to place. The buyer is a trust, very conservative, very risk adverse. They're looking for single tenant retail or medical office with about a 15-year term on the leases. Looking for primarily retail or medical office, excellent credit. Will consider virtually anywhere in the United States, but they are Kentucky based, so preference would be given to things within a 500-mile radius of Louisville. We'll consider cap rates as low as 5%, but their sweet spot is somewhere in the 6% range. Rural locations are acceptable, as well as urban locations. Really, we're looking for something in decent neighborhoods because they are risk adverse and they're looking at this as certainly a long-term investment. And they're looking for absolute net lease properties with no landlord responsibility. Closing on this property is going to take place estimated in the last 10 days of September. So I'm analyzing acquisition sites right now.
Alan, will they do industrial or just retail and medical?
They would consider industrial, but many of the industrial deals are probably bigger than what they would want to take on.
Well, maybe Gary's listings might work for you.
Beg your pardon?
Gary's listings in Tellica, the ones that he has in Ohio and St. Louis, it's near Kentucky. That's near Louisville.
Yes.
So I'll let you, Gary, you might want to reach out to Alan and talk. Alan, did these guys have any other?
I will. I'll reach out to Alan.
No, they are, this is their only asset. And so they are selling this and plowing the money back into new investments.
Well, reach out to Gary, maybe if they have a local expert that's willing to do their property management for them and they feel more comfortable, that might be a good opportunity because it sounds like that's close. The releases may not be 15 years, but they're Sound like they were close. 10 years.
And we have 3 of them are 15 years and one of them is 6 years.
All right.
That's why we have these calls. Anybody else? Thank you, Alan. Ed.
This is Ed. 2 trends. By the way, when I sell the building I'm selling in Pleasant Hill by Walnut Creek, the county lease, I developed a database of a couple hundred people who specialize in buying state, federal, county, or municipal credit leases. So if anybody can get a hold of or get a triple net lease signed by a municipality, county, state, etc., I do have buyers for that. And the cap rates are being fairly aggressive in that area because the governments are considered better than some retail triple net opportunities. So that's one trend. The other trend is for multi-tenant retail. My banking friends are telling me the cap rates, even if you have a grocery store, or even if you have a drug anchored, the cap rates have gone from 5 to 7% in the Bay Area in California, just because of the degradation of retail rent rolls.
Wow.
That's it.
Okay. Again, anybody else have a have or want?
Hi, Patrice Berry here in Denver, Colorado, and with Forte Commercial. I have a freestanding building in downtown Denver in the Golden Triangle District, and I didn't participate earlier because it could be an investment, but I think it's ideally an owner-user building. And I don't know if I should share my screen with the brochure or if you guys just want me to follow up with the spreadsheet.
Send it to, Patrice, send it to Jennifer and she can add it to the list. And
Okay.
then if you want to, again, through the extranet, through CORFAC extranet, you could send it through that too. So everybody can look at it and see it.
Okay, perfect. Okay, thanks.
Okay, anybody else? Well, we've kept it under an hour. Not that that's a mandate, but it's under an hour. I really personally appreciate you guys attending and being part of this. I'm hoping that we can generate some deals out of this and actually see some dollars come in our pockets for it. But I think it's helpful to hear what everybody has to say. If there's anything else, please say it. Otherwise, I will talk to you guys probably at our next in September when we have our virtual meeting, annual meeting, or I guess biannual meeting. So that's in September. When is that, Christy? September when?
So we're doing it the 15th, 16th, and 17th. And then, then the following Tuesday, Wednesday, Thursday. It's one hour session on the Tuesday, Wednesday, and Thursday of those 2 weeks. So the first email went out yesterday. It's very easy. Just register for those sessions like you did for this call. It's a Google link. So we'll be continuing to send out promotions for it. So if you missed it, don't worry. You'll get another one tomorrow.
And Alan, if I could just follow up. First of all, thanks everybody for being on the call. This is awesome. And Alan touched on this a couple times. We got a great system to send notes out to everybody within the organization, whether it's a question, whether it's a have or a want. So if you don't know how to do that, you can reach out to me, Christy, or Jennifer, and we can send you really simple instructions to do it. And the beauty of it is you can send it to everybody, or you can focus it in on, people who just do industrial or office or what have you. So I would encourage you to take advantage of that.
For sure. All right. Thank you, everybody. Have a great day. I think that's it for us. We'll talk to you in September.
Thanks, everybody.
Hi, everybody. Good meeting.
Thank you.
Good meeting. Thanks, everyone.